Aradel Holdings Q1 2026 earnings report. Yeah, you know why it is coming out by this time, due to the merger, the acquisition they did. So it took time for them to release the results. So if you look at the results, you see that it's a totally different business than it was in 2024 or 2025, earlier 2025, because what you do with Q1 results is to compare it with Q1 of the prior year. So the comparison really won't be it won't really be a direct comparison, because it's not a different business. Example, that's why you're seeing revenue growing by 264%. You see profits after tax growing by 252%. So these things are not organic, just like the headline is. It's because of the structural change or the consolidation in the business. So let's look at the income statement side of things. So if you look at the income statement, remember you can always download these graphics from our ACE page. So this is the income statement. Let me blow it up so you see, you understand what we mean. So if you look at the income statement, you will see 200 just because of the structural. So Q1, if you compare Q1 2026 and Q1 2025, that's when you start seeing the difference. Remember, a consolidation happened, sorry, and they bought ND Western Gas and bought Renaissance Energy. So those things added to both their oil and the crude. ND was the gas play and the Renaissance was the crude play. That is why you see revenue now ballooned from 728.5 billion. It ballooned. Unlike when you compare it with Q1 2025, it was just sub 200 billion. So that is the thing. So that is why if you compare, you see the numbers running in billions. But net, so on the both the cost now, because it's now a bigger business. So that is why it will not be an eye for an eye comparison. Profit before tax, you see it. Then profit after tax, you see. So it now became a bigger business. So that is why the margins, everything. But the thing that happened is, if you annualize this number, let's say this revenue, which is sub 200 billion, if you analyze it, like analyzing means times it by 4, you see that it's far way better than this number, which could have, if you analyze this roughly, we have 800 billion. So that is why you see the margins. Or if you analyze this, you see that you are hitting within 290 something billion plus in the margin. And so if you analyze, you could have seen that it is far way better. That's why you see the margins. That's why you are seeing the margins, like the gross margin compressing compared to prior year. Then operating margin that ballooned. This operation is not just this operation side of things. This other income is another leg to watch. So this other income was coming from a non-recurring earning, and one of those earnings were actually from, there is what we call in oil and gas, which we wrote about. So it's overlift, a kind of overlift. So you can go and read about it. So there is an overlift. Also, there is a fee they charged in helping one of the oil and gas stuff. So they run an operation, and number one, which must be balanced out. So when you are doing over more than you are supposed to, due to how it was and apportioned in the crew there. So due to the apportionment, so there is a joint venture play. So So okay, go sell off. Next time you will not do underlift. So it's an extra money in advance that entered. So that is what prop this other income side of. So so this is what the income statement looks. It looks solid, but if you analyze the other one is still fair way better. So it's a neutral income statement side of things. It doesn't mean that happened. Magic happened. Then if you go to the comprehensive income, because it's a dollar play, so when you lay the dollar side of things, you see that because Naira strengthened, there is a comprehensive loss. That is why you are seeing this comprehensive net margin flashing red. So that is it. So let's look at the balance sheet side of things. So at least I think now okay. Hold on a sec. The balance sheet is loading. Okay, so this is the balance sheet. So naturally, what will happen? You see, the assets will grow more because more was added into the business. So naturally, the asset side of things, where is it? Okay, total asset now. So the total asset, and another thing with this balance sheet though, this balance sheet was comparing Q4 2025 and this. So already in Q4 2025, the business has entered. So you see that assets grew more. So a better comparison will come when we start comparing the balance sheet balances out. But the business is bigger, the liabilities are bigger this time around because we are also indirectly inheriting the liability of those two companies that you put in their trade receivables and stuff like that. So it is actually a bigger business. So if you look at the margin, because there was no much, the current ratio is still sub the standard, it is substandard because of the debt. The debt is there. And some other things to also note is number one is that the business combination propped up FX affected the other earning, like we said. Then the gas finally, unlike in 2025, if you look at our analysis in Q1, full year 2025, the business has three segments: gas, crude, and the refined products. So the gas segment also make money, but finally it is making money now because of the ND Western gas play. Then the crude also is now making money. Then the refined product already is the organic performance that it has been making money. So it's interesting to note that. Then another thing to also note is that there is a